Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 future chart. Let's start off here with the S&P 500. Very tricky trading session today. We had the CPI report that come out 1 hour before the US markets opened, and the data was pretty good. The data was good. We had core CPI that come in at 0.2% versus 0.22%. Estimate, so that was a beat. And then of course we had the CPI reading that coming at 3.2% versus 3.3% estimate. So the numbers were good. We had a jobs number which come in a little bit weaker than expected, which of course is good for the Fed's case. And more importantly, we've had this figure that has dropped, which is very important. This is the September CMC survey. So this represents the likelihood of a rate hike in September. And as you can see, it sits at 9.5%. Going into the CPI reading today, it was at around 13.5%. So we have seen a drop. And then more importantly, if we go to November, we only have a 23.7%. This was sitting at around 30% going into today's CPI. So that's also dropped. And then December, if we go to December, we now have a 68.4% chance of a pivot. So what does this mean? It means that the Fed's job may be done now for the rest of 2023. Now, of course, there's still a significant amount of data that we still need to get from now up until year end. But this just kind of shows you where investors' heads are at this moment in time. And this is actually quite positive. So, of course, initially we saw the markets rally. We saw the S&P 500 trade all the way up to 4,523, which is a high since Monday. And things were looking good. But in the past hour or so, we have had a very hard snapback, and we currently find ourselves trading just in positive territory, pairing most of the gains during today's trading session. That being said, I would still be a buyer of this dip. And I know that I've kind of sound like a broken record. I've come onto YouTube this whole week saying buy the dip, buy the dip, buy the dip. And, my strategy would have made you money because every single day we have had these nice sharp movements higher once Europe has closed. So that's what I'm kind of looking at later on during today's trading session, where, whether once Europe does close, we do get that snapback rally back up towards the highs of the session. Hopefully we do. But even if we don't, I just want to quickly draw your attention to this chart that I drew in my Signal group chat. Now, this is every CPI report that we've had over the past 9 months since we've seen a decline in the CPI report. And every single time when the market has gone into the CPI report that week down more than 1%, so of course the market this week is down 1%, that's the S&P 500 for example, every single time when the market has gone into the reading down 1%, 5 days after that CPI, which has beaten estimates, that's very important, it has to beat estimates towards the downside, so it'd be good news like what we got during today's trading session. 5 days afterwards, the S&P 500 has been positive 3 out of 3 times with some pretty significant gains, 2.8%, 1.1%, 5.3%, with the average rally between 125 and 150 points. Now, if I just quickly draw your attention to the S&P 500, going into today's print, we were trading at around I think it was 4,490. So if I just quickly draw 150 points from that level, or 125 to 150, that takes you to 4,620 to approximately 4,645, and that could be a target that we achieve within the next 3 to 4 days. So I think that chart is something that you definitely need to keep a close eye on as we work our way through the next couple of trading sessions. Of course, tomorrow we have the PPI report. I'm expecting that to be good news for the markets as well, and a potential rally point for the markets. Now, moving over to the Nasdaq100, similar to the S&P 500, we did rally significantly at the start once we had the CPI report, and then once the markets open, we kind of dropped off, and we currently find ourselves trading near the lows of the session. What I like about this chart is that we have plenty of support just below us here at the 50-day EMA, which I do believe will offer a fantastic buying opportunity if we were to trade lower. The good news is that I do believe that we are going to break above today's swing highs and go and trade back up towards the highs of the year, up at around 16,000. And then moving over to the DowJones30, very similar to the S&P 500 and the Nasdaq100. Again, we've paired most of the gains, but we are still forming this nice bullish flag pattern. And I think that this is a pattern which will get broken out of eventually and take us back up towards the all-time highs here for the DowJones30. 3 other charts which I think are very important that you pay very close attention to is the US dollar. Of course, the market started to rally when we had a breakdown in the dollar. Unfortunately, the dollar paired its losses, hence that's why we have seen the markets pair its gains. And then the second chart is the 10-year bond yield. It's crept back above 4%. We need this to be below 4%. 4% is a very large psychological barrier, and according to my DeMark indicators, we are about to see a potential fold over here in these bond yields, which could take us down to 3.8%. And then last but not least is the VIX. I would like to see the VIX drop back below 15. At one point it was as low as 14.66. That was a very attractive area, but I want to see the VIX go and challenge 13 again. That would be really ideal, and I think that would help the market's case trading back up towards new yearly highs. But yeah, that's going to wrap it up for today's video, guys. If you would like to join my free trading signal group where you can gain access for 1 month for completely free of charge, as well as receiving my daily market research, which I post daily prior to the US markets opening, to make sure you scan this QR code on your screen. It will take you to my website. It takes 10 seconds to get involved, and as I mentioned just a few moments ago, it is completely free of charge to join, and you can cancel at any time.